You're watching Investors Guide. This is our budget special episode. Thanks for staying with us. We were talking about taxes when we went into the break. The other big piece of information that came out were indirect taxes. When the finance minister increased general excise and increased service tax by 2%, brought more services under that net. Shailesh, is he giving to us with one hand and taking away from the other? How badly will this affect our household incomes? Because it will affect how much we have saved at the end of the day to invest. Do you think this is going to hit each and every household income?
It has an inflationary obvious potential.
We're also talking about a fuel price hike now at this point.
So we will see an inflationary push in the short term. But in the long term, if this is truly a roadmap to the GST, which it appears to be, then this is a necessary change that has to be made. And given the fact that we need fiscal consolidation and a movement back to the FRBM, you can't have it right always. You can't have everything going the way of the taxpayer and depend only on the Laffer curve, although that was referred to in the economic survey. But there are offsets to this increase. One is the full VAT ability. The idea will be that everybody in the whole supply chain will now want to pay tax. Because if you don't pay the tax, then your tax is not offsettable by the next person in your chain. And therefore, there will be a very important thrust in terms of enhanced indirect tax revenue, which is important. The other offset to this is the fiscal compression. So the signal is that inflation will be lower. If you're able to drop the fiscal deficit from 5.9 to 5.1, it is a strong anti-inflationary signal.
All right. Pankaj, Shailesh told us that we will see inflation go up in the medium term. When do you expect that RBI cut in rates to come in that case, if inflation is going to go up in the medium term?
So I think there are multiple reasons on which the interest rate depends. I think number one, obviously, is an inflation. Number two is the available liquidity in the system. So I think one should not forget, let me paint a picture. If today you look at the gross borrowing or a net borrowing, it's almost at the similar level what we do, a little more than that, talking about close to 5 lakh crores. Banking system gets about 10 lakh crores of deposits. 35% of this really comes from them. Then rest come from the capital market participant like funds, insurance or retail participation through various other means. 25% come by way of an external borrowings or through by way of FI or FDI kind of investments. So if you are going to have a situation like this where government is going to overcrowd and 65%, mind you, the borrowing happens in the first half. So there's already overcrowding because the expenditure has gone up by 20% as compared to last year. So we see a fiscal consolidation. It is because not we have cut down the expenditure. It is because our taxes have really gone up, excise and GS and our service taxes. So in a situation like this, 65% borrowing by government, largely coming from the same channel. My guess is then there's a big game to be played by RBI, and you have an inflation on one hand, but you also have to look at liquidity on the other hand. The only thing I possibly think, what are the options they have? Because if they don't do it, you already have a situation where growth is going to go and cut down, which is going to start impacting you right now. And we have already seen the GDP degrowth of close from 9% to 6.5%. 55% has been attributed because of increase in interest rates.
Right.
So my belief is it's not easy, but they will have not many choices to do it. But what market was expecting that is going to be dramatic rate cut and too fast, it may not happen in that pace. You may see some cut coming through because for them, if they don't do that, because of the fear of inflation, growth anyway will tank out. So it's better to have growth and manage inflation over a period of time. Exactly what Shailesh said. Short-term inflation, manage it like I will, but over a period of time, just do it. So you may see that starting from April, but not as dramatic as what people were expecting earlier.
All right, a rate cut possibly in April, but not so dramatic. You might see it go down slowly. Now, we have time to take a few questions from our audience. You had a question on tax? Go ahead.
Yeah, good evening, participants.
Would you hold the mic up, please?
Honorable Finance Minister, Mr. Pranab Mukherjee, he had invited suggestions and views for during the pre-budget survey, and the tax-paying community had requested for an increase in the tax exemption limit from the current 1.8 to 3 lakhs. Now, I, as an honest taxpayer, very, very disappointed that he has increased it by merely 20,000 from 1.80 to 2 lakhs. That is hardly anything. So I request again on behalf of the entire taxpaying community of India that Mr. Pranab Mukherjee should again review this decision.
Shailesh, review this decision. Do you think there's a possibility maybe next year, or do you think, given where we've seen the DTC right now, that parliamentary committee had made some demands that were quite drastic. Absolutely. The finance minister said he would consider them, he would consider those demands, that they're going to be looked at. Do you think there's a possibility that when the DTC does come in, that it will have larger tax breaks for the retail investor?
I think so. I think it is inescapable to raise it to 3 lakhs. The demand on that is so very widespread, as the gentleman points out, that it's going to be very hard for him not to raise it to 3 lakhs. But then we'll also have to watch what exemptions and deductions he chops off to get to the basic discipline of fair, easy to compute taxes.
I want to talk about equity now and how the budget announcement will affect the equity markets. Dhirendra, I want to bring you in. There was obviously a push there to bring in more retail money into the equity markets. Do you expect that cut in STT that we saw today, plus that Rajiv Gandhi investment scheme, as and when we do get clarity on how it's going to be implemented, do you expect it to bring in a lot of money to our equity markets? Do you expect it to boost sentiment?
No, not at all. I think, the operatives are still away for the Rajiv Gandhi equity scheme. And what is needed for the market is, long-term capital into equities, which is thoughtfully chosen as an asset class. And I don't think, STT has ever been helpful in getting that money. If STT actually helps traders, it makes their, the active traders in the market. I don't think, STT has ever been a deterrent or STT has ever been, part of our thinking framework when we think of long-term investment. STT becomes very crucial. It is a deterrent, it is a barrier, only when you're thinking of investing for a few days, or if you're a very active churner of equity investment. And I sincerely feel that, if the Rajiv Gandhi equity scheme is structured in a nice way, it can translate into something very meaningful. It could be very big. It could be very big from one standpoint, that no other investment which gets a tax concession is ever directed to equity. We have all these things, all other concession which get fragmented. You have the ATC, and that money can actually get into insurance, your PF, your PPF, or anything, the whole ambit. And investors normally get into the wrong thing at the wrong time. Like this could be a good time to be investing in equity, but people's, the appetite for fixed income is very high, or fixed income tax saving alternatives. So I think, something which is directed to equity only, and but I think, it will be premature to say that it will be as impactful as it has thought out to be.
Pankaj, we saw that disinvestment target of 30,000 crore rupees. We also saw a disinvestment target last year. How achievable is this target? Or is it just like a New Year resolution that you put it out every year, not able to achieve it? Does the government have a market for IPOs and for FPOs right now?
I think you have to look at it in 2 parts. First of all, disinvestment is also a function of a market. And second, when you're doing a disinvestment, it's like any consumer product. If you're going to tell me that this glass is going to cost me 500 rupees, I'm not going to buy it. If you say that its normal price is 40, if I'm going to get it 35, I'm going to buy 10 of them. So what is that right price for the market is very important in a particular market situation. One cannot feel and think that because, let's say for example, ONGC was rightly priced or wrongly priced. ONGC may be worth 300 bucks plus, but at that point of a time, in that market sentiment, you would have priced it rightly, maybe 10, 12 bucks less. Forget about $3 billion, you would have got another $10 billion more for that. So appetite to buy Indian companies are there. So I don't think 30,000 crores is a very ambitious target to go into it. Provided they learn from what they've done in the last time, price it right for the investors, leave something for the investor on the table, which is happening in any other consumer product, like a good IPO which comes at a right price. You have recently seen a good IPO which got subscribed more time and also got listed at 30-40% premium. So I think that's a message. So I'm not too worried about 30,000 crore if they follow the right process.
All right, I'm going to come back to you in a little while and ask you about sectors and which sectors you like right now. But we have a very quick question from an audience member. Go ahead.
My question was regarding the infrastructure investment that there's a investment coming of like 50 lakh crore into the market. So is it the right time for us to invest in infrastructure bonds?
Right, infrastructure bonds, investing in infrastructure in general. Pankaj, for the infrastructure sector right now, there was a lot of talk about infrastructure. There is normally in every budget. But is this what that sector needs? Is this enough?
This sector needs much more at any point of time. All it depends upon what are the policy framework. As I always said, India is a great structural story, but unfortunately it becomes cyclical every time. So India's great structural story would be really, get boosted if we are going to have a good infrastructure story. So I think in this budget particularly, there are a few things which are very directionally pointed out. One, you're not going to raise 60,000 crores if you don't have an end use to it. So I very clearly see that infrastructure as a sector is going to get boosted. 20% of expenditure which have increased. Everything is not bad, because at the end of the day it also signals that government is going to spend money which will help us revive the economy.
So would you recommend retail investors look at the infrastructure sector right now? Whether it's directly, indirectly, do you think it makes sense?
I think let's divide into two parts. If it's an infrastructure bond which is for long-term saving, if you get at a very decent tax-free rate or taxable, I don't know what form, a tax-free rate is going to come through, I think one should definitely be part of an asset allocation, because you're trying to lock in your long-term returns at and India is going to progress over a longer period of time. Interest rates are going to come down over a longer period of time. So one should definitely look at. In terms of an equity, I think it's not easy to go and judge a company. So unless you're an expert, I would say yes, infrastructure is a great story. So two things are required. You need to be expert to go and buy directly. If not, please go and buy through a good fund houses and have a patience, not like any other stock you're buying it. Because infrastructure, even a government to give an order takes some time or a year or so. So if you're investing in an infrastructure company, though we don't have any great infrastructure project as of now in this country, but me and Shailesh were discussing today that some of them have been announced in this budget. And if you look at the expenditure pattern, partly is for very socialist kind of expenditure on whatever normal social spending, health and blah blah other thing. But large part of the money is on highways, roads, which will really boost some of this stuff. Go through a fund or have patience to invest good company for a longer period of time.